Every day, over $50 billion worth of goods crosses international borders. But here's what most people don't know. Up to 10% of global trade documentation may be fraudulent or counterfeit. That's not just paperwork. It's real money, real businesses, and real economies at stake. I'm Sahil Kataria, and today we're breaking down how fake documents are quietly sabotaging the global financial system. International trade runs on documents, bills of lading, certificates of origin, letters of credit, and customs declarations. These aren't optional. They're the instruments that make $32 trillion in annual global trade possible. According to the International Chamber of Commerce, trade finance fraud costs the world economy up to $5 billion each year, with document fraud as the primary driver. Meanwhile, the World Customs Organization estimates governments lose over $100 billion annually in revenue due to fraudulent papers. Direct financial losses. When importers use fake certificates to dodge tariffs, governments lose vital customs revenue. The OECD reports that counterfeit goods make up 3.3% of global trade, valued at over $500 billion, often enabled by fraudulent documentation. Banks are also at risk. Letters of credit worth millions can hinge on fake bills of lading. In 2020, one commodities fraud in Singapore, using forged warehouse receipts, cost banks over $1 billion. Insurance and credit costs. Fraud raises risk, and that drives up costs. Marine insurance rates rose about 20% between 2020 and 2023, partly due to document fraud. The World Trade Organization found trade finance costs in emerging markets up 40% as banks add verification layers to combat fake paperwork. Scenario 1. Customs undervaluation of fake invoice lists goods worth $100,000 instead of $500,000, cutting import duties by 80%. Replicate that across thousands of shipments and losses skyrocket. Scenario 2. Trade-based money laundering criminals use false invoices to move illicit funds. The ANORC estimates $800 billion to $2 trillion is laundered globally each year, much of it through trade manipulation. Scenario 3. Sanctions evasion fake certificates let banned goods enter markets. The US Treasury estimates billions lost annually through sanction evasion enabled by document tampering. The fight against fraud is now digital. Blockchain trade platforms like TradeLens and V.Trade create traceable, tamper-proof records. The Asian Development Bank says digitization could cut trade costs by up to 30% while closing major fraud loopholes. AI-driven verification is transforming banking, detecting document anomalies, fake signatures, and mismatched data instantly. The ICC's Digital Standards Initiative, launched in 2021, aims for global adoption of e-documents with built-in verification, reducing discrepancies by over 70%. Counterfeit trade documents aren't just a compliance headache, they're a structural financial threat. They inflate costs, distort markets, and make trade riskier for everyone. The World Economic Forum estimates that smart digital trade solutions could add $1 trillion to global GDP by eliminating fraud and inefficiency. Technology is catching up, but can adoption keep pace with fraud innovation? If this helped you understand the scale of the problem, hit like, subscribe, and share your thoughts in the comments. Thanks for watching. I'll see you in the next one.